We're halfway through the year, so it's a great time to check in on where you're at with your money. In this episode, Mid-Year Money Moves, we'll talk about how smart investors tweak their strategies, optimize their plans, and stay on top. Whether you're ahead or need a push, now's the time to reassess and finish the year strong. I'm going to go ahead and bring in our panel, Bob, Tyler, and Nick, to break down the most overlooked and impactful mid-year strategies they're seeing with their clients right now. Bob, you want to go ahead and get us kicked off?
Yeah, sure. Thanks, Ryan. I think that the middle of the year is a good opportunity to do some planning and just doing an overview of where you're at financially. For me, the thing that comes to mind first is just checking in on taxes, right? We're about halfway through the year. Where are you at withholding wise? Where are you at income wise? Did you have any income come in that maybe you weren't expecting, or not as much come in as you were hoping? Just taking a look at, okay, where are we at so far with our estimated tax payments, with our withholdings, with our, whether you're retired and it's distributions or withholdings from your work, and just understanding, okay, where do I think ballpark I'm going to fall for the year? Right now is a better time to plan for it than in December, or certainly next April when you get a surprise tax bill or refund from the IRS. So taking some steps to start to plan for it right now is a really good time to do that.
Yeah, I think it's even more important for business owners too, Bob, because, businesses don't have nice, easy flowing, cash flow or net income. So if you own a business, definitely need to stay on top of those things. Another thing is, if you filed an extension, check in with your CPA, see where those are at, because October is going to come around really quickly. And, you don't want to be scrambling those last 5 days, trying to make sure everything's in line.
Yeah, it's a great point, Tyler. And just to bounce off that, what we have for a lot of our clients is they might not be, business owners where they own some massive construction company or something. They just have a small business where they're making and selling jewelry, or they're doing a number of different things for just some extra income on the side. And even if you're doing that, right, understanding where you're at income wise, how it ties into maybe your W-2 job or role as well for you, a spouse, however it may tie together, but certainly just saying, hey, where are we at income-wise, where are we at tax-wise, now is a great time to do some tax planning.
Yeah, the side hustle obviously is becoming more popular. So, just as you said, seeing how that fits in with your day job income, and making sure you're on top of that.
And, enough about the working and stuff. When it comes to investing, now the mid-year point is also a helpful time. I mean, we all have these kind of like mental benchmarks where it's like, how am I doing so far this year? It's like, forget about the last 3 years, but like, how am I doing this year? And a lot of people like to look at their accounts through this context. And it's not a bad thing to do that. But when it comes time for like actionable items or implementation, we like to actually do our trading and rebalancing more on a drift basis. Like when we have a asset allocation, and then if one piece of the pie does better and does better enough, then we'll peel off some earnings there and redeploy it to the other part of the pie. Versus just doing that like super systematically on a calendar cadence, which is actually what a lot of target date funds do, right? Like every single quarter, every 6 months, certainly, those target date funds are taking another step down, more and more conservative as you get closer to retirement. So that's one of the things that we do for our clients is not be so robotic. Like in our case, like just this year, for example, we did our big rebalancing in April when markets were down almost 20%, versus like sticking to a semi-annual rebalance here in July. So anyway, those are some things that, you can do, you can look out for. And, this has been a year where there's been a ton of dispersion, right? Like Bitcoin, cryptocurrencies are up, international stocks are rocking and rolling. There's been huge moves in AI stocks. So now is not a bad time, but just sticking to a process that's more drift based is generally what we recommend.
Nick, I got a question for you. How much importance do you put on like the first half of the year's performance? Does that dictate second year, the whole year performance? How do you view that?
Yeah, I mean, it's tempting when we've had a really good run this year to just be like, hey, I'm up 6, 7, 8%. Let's just cash out, lock it in, call it a year. But we know that that's usually not the most effective strategy long term. And like statistically speaking, when the first half of the year does really well, the back half also does well, like better than normal. And so, we're at least biased to stay invested. We still think there's room to run in this market. And, the U.S. economy is still slowly chugging along here. And, we'll see how we'll do a mid-year update here in a couple of weeks, but we'll go into all the things about like tariffs, inflations, economic growth, and also the AI wave that's sweeping the nation.
Yeah. And I think that just what you're talking about, Nick, is helpful to revisit, right? So we're mid-year and mid-year money moves, revisiting and just taking a look at where am I at investment wise, right? Like how am I allocated? Am I saving to the right types of accounts, right? Am I sticking to the plan that I had coming into the year or over the past couple of years, whatever it may be? But to your point, and I think what you're saying, Nick, is that doesn't mean that you should rebalance at these time frames, right? You should have some sort of rebalancing structure in place independent of the time, but just taking a look at all of your different accounts, understanding if you're saving enough to your 401k or putting enough aside for the house fund or whatever it may be. This mid-year check-in is a good time just to check in on the balances, I would think, and the behaviors, not so much taking specific action.
Yeah, exactly.
Yeah, check on those cash positions, Say you got a raise last year, is that checking account growing? Is that savings account growing? Maybe you need to deploy some of that, just to add on to your point, Bob. Good time to do it.
Yep.
More about controlling the things you can control and letting the things that you can't control continue to chug.
Yeah, definitely. And, I think another thing, just to kind of change gears a little bit for another kind of mid-year action item, right now it's the summer. Things are a bit slower for generally what we do with our clients because people are traveling, people are, busy with families, they're, enjoying the summer if their, kids are off, whatever it may be. I think that while it's slower right now, it's a really good opportunity to look at, hey, if you don't have different like estate documents in place, right? Like do it now while, there's, kind of this freedom or flexibility in the scheduling, right? To understand, hey, do I have, the right, my will, my living will, my power of attorneys, these different things in place. Talk about it with your spouse, talk about it with your kids or grandkids, whoever it may be that's a part of your estate plan, and just revisit it here during what I would call the slower months, right? Take an opportunity to just review those things, beneficiary designations, whatever it may be. And that's a good opportunity to take some steps to look into that.
Yeah, and just teeing off that, the other mid-year thing to look at now while it's slow, Bob, is the RMDs, right? Like RMD season usually sneaks up on folks. It comes in November, December, and that's right around the holidays when nobody wants to worry about financial stuff. And so we recommend, like right now, while it's slow, try to knock out some of those required minimum distributions. And we're actually meeting with client today to go through this exact thing, because if you're taking them from accounts with us or accounts held away, like sometimes those processes can take a while, the ones away specifically, where there might be additional paperwork or signatures that have to go back and forth to push out the distribution. And also, like secondarily with that, it's great to have the RMD out of the way, so then we have the opportunity to do Roth conversions closer to the end of the year, because we can't do the Roth conversions until the RMDs are done. So those are just a couple of the main tidbits that now's a great time to strike on. So
awesome. Thanks everyone. So now that based on kind of everything we talked about, what we're going to do now is do a lightning round where I'm going to give you guys each 3 words to give your one recommendation for what you would do for the rest of the year, or if you change anything, whatever, let's make this advice a little more actionable. So whoever wants to take that, go ahead and jump in.
Do we really have to use 3 words?
As close to 3 words as you can get, Tyler.
Check on extension. So if you filed an extension, get with your CPA, make sure everything's lined up for October. We've been talking about slow season a lot. After CPAs get through that April deadline, they take a nice long summer. So you got to get back on them, make sure everything's set up right for October. So start that process now.
All right. I'm going to piggyback off that. I'm just going to say more generally, check on taxes, right? Check on where you're at tax-wise, whether that's your extension or your withholdings and estimated taxes. Just do a refresh, check on your taxes.
I'll, keep it a little bit different. I'll go check on saving/investing, 4 words. I'll break it. And the reason, like, one of my favorite tools to use is Monarch Money. There's a lot of great budgeting apps out there that can pull in all of your accounts and spending. And it's great just to be able to see, like, okay, mid-year, where am I at on spending year over year, month over month? Am I trending in the right direction as far as how much I'm saving, how much I'm investing? And, mid-year is a great point to check it out.
Awesome. Well, I'm going to have to disqualify Nick. Still, you had to go to the 4 words. So it's between Tyler and Bob. Tyler's voice isn't feeling so good this week, so we'll let Bob go ahead and take the 1-minute rant. So, Bob, what do you got for us?
Sympathy.
All right.
All right.
Sympathy win, I'll take it. But listen, I do have a good rant today. I just read an article this morning that a cash flow king, he raised a bunch of money up in the Cleveland, Ohio area. Just turned out that he got sentenced to, I think, 7 years in prison for stealing $7 million from about 100 different investors in the Northeast Ohio area, claiming that he was a cash flow king and had this secret key to rental properties for flipping and, just cash flowing them, everything like that. And I hate seeing these stories because this is an unregulated, unlicensed guy telling people that he is going to solve all of their money problems if they just give him money because he has the key for creating cash flow from real estate. Now, listen, real estate can be a great investment tool. It can help a lot of people accomplish all kinds of goals. But these podcasters these days, these TikTok influencers, they come on here, they spout all kinds of loud words and all these great things that they can do with your money, but they're unregulated, they're unlicensed, and they're out there. A lot of them are doing bad things with the money, bad actors, and at the very least are overemphasizing the returns that they can offer to you as an investor. So please be wary of these. Please be careful of these. It drives me nuts because it gives financial advice in general a bad name. And we just want to be out here to help people. And then there's these guys and gals out here scamming people out of their hard-earned money, millions of dollars. And so avoid those scams. I hate to see it. It drives me nuts when I see it. I will end my rant there.
I'm going to clap for that one.
Yeah.
I think that's the next rant will be the newsletter people, because that's they go part and parcel, man.
Yeah. There you go.
I think that's a rant we can all agree with, Bob. And just the takeaway here isn't that it's $1 million or a year in jail per $1 million you steal. The takeaway is if it sounds too good to be true, it's probably too good to be true. So That's it for this episode of Balance Your Wealth. Thanks for joining us, everyone. We look forward to seeing you next week.
Cool. Thanks.